Hello, everybody, again. Thanks, Yar. Thanks for Eurasian Investors and Adam Smith Conference for having me as moderator. I'm Jacopo Dettoni, Deputy Editor of FDI Magazine, the For Investment Monitor of the Financial Times. And more importantly, I'll be moderating this very fascinating session on the perspective of equity and markets in Uzbekistan. I say it's fascinating because this is a country where just up until a few years ago, cash was the absolute king. I'm sure that many of you remember a time where we were walking around Tashkent or the country with bags full of banknotes, and it was tough to deal with all this cash. And now we are talking about developing functioning capital markets, as Mr. Nazirov has just mentioned. So we got 5 fantastic panelists with me today. Let me introduce them one by one, and then also Mr. Nazirov will join again the panel to take a few more questions from the audience. So next to me, we got Christophe Charlier, who is the chairman of Renaissance Capital. Mr. Charlier is an experienced finance professional. He has served in executive positions and on the board of some of Russia's largest companies, including Rusal, Police Gold, and Norilsk Nickel. He's also a film producer, and as we were talking, he was the chairman of the Brooklyn Nets for 4 seasons, for those that follow NBA basketball. Welcome, Mr. Charlier. Next to him, we got Anvar Irshayev, who is the chairman of Universal Bank, commercial bank in Uzbekistan. Mr. Irshayev has an extensive work experience in strategic consulting, investment banking, assets management in international financial organizations in Germany, Russia, and Uzbekistan. Next up, Mr. Sardor Koshnasarov, who is the managing director of SIL Capital, a Tashkent-based investment bank. Mr. Koshnasarov has nearly 10 years of experience in advising investors and originating and executing investment deals across different industries and in countries such as, in frontier countries such as Myanmar, Mongolia, Mozambique, and other fast-growing frontier markets. Next, Ms. Ann-Christine Muller, who is a financial officer with the International Finance Corporation, the private sector arm of the World Bank. Ms. Muller focuses on providing financing solutions to the IFC's clients with an emphasis on the development of domestic debt capital markets. Prior to joining the IFC, Ms. Muller worked at Legal & General, the largest asset manager in the UK, and as an interest rate swaps trader at Goldman Sachs. Last but certainly not least, far away on the other side of the table, Powell Saya, a partner in the capital markets practice of law firm Sherman and Sterling. Mr. Saya advises issuers and underwriters in Europe, the Middle East, and Africa on equity and debt capital markets and M&A transactions, as well as security law, corporate governance, and ongoing reporting matters. So welcome again, everybody. Mr. Koshnasarov, let me start with you. We have heard from authorities and other panelists about the ongoing changes to the legal framework of the country, the ambitions of this new market code. From your observatory, from your perspective, what are still the impediments to the development of a functioning debt and equity market in the country, and what are your expectations for this upcoming markets code? Thank you.
Thank you, Jacopo. Actually, for me, it will be a little bit hard to complement what Mr. Nazirov said and delivered a very comprehensive strategy and presentation from the CMDA perspective. So, just with regard to assessing the Uzbekistan's capital market, we have to be clear that now we are talking on 2 different dimensions: what we had before and where we are heading to. So when we say that, yes, definitely local capital markets is relatively small and relatively illiquid, you don't have many products on the menu with regard to financial products, and sophistication of the technology and then transaction costs associated with buying and selling securities. So, but now with the new agency, with a new management team, and with the new strategy, and with the help of international consultants and by IFIs. So we will be hopefully going to the stage where we will have more financial products once privatizations come online, including by way of IPOs and SPOs, of high quality, large scale, diverse in terms of industries, companies into local stock exchange. So we are being a local investment banking boutique and doing brokerage. So we are being approached by international investors saying, guys, we want Uzbekistan story. We want to get exposure as soon as possible to Uzbekistan in high quality, relatively well-priced assets. But what do you have on offer? So we need to have lineup of financial products, equities, and bonds, so that we can offer to international investors. So from the other side is that from the issuers, both state-owned enterprises and the private companies, and they're saying that we want investors. And definitely, if you look at the investment sources structure, definitely, and banks, they play a major role. They always, almost 1/5 of total investments come from banks, and the same amount comes from the companies themselves, and companies themselves being state-owned enterprise themselves, and the private sector participants, companies, unfortunately, they are not well represented. So definitely there is need, there is hunger to capital from both state companies and private companies, but they want to raise capital as soon as possible at a cheaper price. So whether local capital market can provide that solution is a question. So you have big companies like Promstroy Bank yesterday, they issued Eurobonds, so they need large-scale capital, and they go to international markets rather than locals. So again, just in summary, so in order to assess local capital market of Uzbekistan, we need to look at the past, so which should actually call upon the audience here, investor community, that we need to get rid of various stereotypes about the Uzbekistan capital markets, because that's past, and we have Uzbekistan version 2.0, so in where we should now, and expecting that new products, new policies, and new different ways of attractive terms and conditions come to international investors.
And I guess this is an interesting challenge. There is hunger for capital, but at the moment, international markets are a more feasible option for companies rather than domestic markets. So anyway, it's a catch-up game and for authorities to catch up and get the market ready to make the most of this thirst for capital in a way. Mr. Richayev, what is your perspective on this, and particularly on the banking sector? There were historical restrictions for investors to invest in local banks. Some of these restrictions have been lifted. Do you want to give us an update on that? And again, from your perspective, what are yet to be fixed to make of the Tashkent Stock Exchange a functioning market?
Jacopo, thank you very much for question, and thanks for arrangers to for organizing such a great event. I'd like to divide my short speech into two parts. First is try to answer your question: what restricts international investors from investing into shares of the banks, of Uzbek banks? And the second, probably to mention a few barriers, yes, which are now still exist for investors to tap the Uzbek market. As probably many of the present people here know, until very recently, international investors were not allowed to directly buy shares, any single share of the Uzbek bank, without getting a prior permission from the central bank. The procedure was a bit complicated, even though there are successful cases when investors bought shares, but this was quite a complicated procedure, taking like from 3 to 6 months time, and provided the fact that to gather all the documents were difficult and to get the permission. So the Uzbek banking market was like mostly closed for portfolio investors. So this problem has been shifted now, and investors can freely buy up to 5% of the charterable capital of any bank on the stock exchange. And we have to admit that the banking sector probably is one of the most lucrative and attractive for investors. Why? Because banks are one of the few organizations which are do their financials according to international standards. They do run properly, like normal corporate governance practices do exist in the banks. Central bank is insisting on implementation of the risk management practices, and the banks are the organizations who can provide audited statements to investors, which are, of course, very important, and probably many of their medium or small-size enterprises cannot offer to investors at the current moment. So we can state that the banking market is already open, and the investors can come and already buy the shares. The only thing is that the process for the time being is quite difficult. So we have still probably, in order to shift the process, invite probably like global custodians to ease the process of buying the shares and to make the market more liquid. So now I want to come to the second part of the speech, saying like what barriers do exist for the time being and what can be done to shift the barriers. According to our estimations, of course, we have to admit that the market cap of the Tashkent Stock Exchange is relatively small for the time being. According to our estimations, it's probably like the size is from $3 to $5 billion, whereas the free market float is probably something between 10 to 20%, which is still like very, very small even for frontier market investment funds. And even like one more fact, which is probably like also not very, very good, is that over like probably 70 to 80% of the market cap is owned by the government-owned companies. And I'm sure Mr. Sunatullah Bikena will a little bit later announce the huge plans of privatization, which is going to be done in the country. So what can be done in this sense? Of course, with the privatization is a must now, and we all understand this. And what makes me happy is that the government officials do understand this, and they started already to announce and take the concrete plans of bringing the state-owned companies to the market. The second thing is that we are in a position now to make the investor base larger, not only by bringing foreign investors, but also by educating the local people and local organizations to tap the market. So for this, of course, we have the work should be done on both sides. On the investor side, so we have to educate our people and teach them that the local markets, they can provide, or they can be a good opportunity for earning an income. The second thing which should be done is that we have to persuade and we have to explain the local companies that the capital markets do bring an like very good opportunity for raising capital. And it was already said before that the capital needs are very huge in the country, and there is a need for both, for debt capital and for equity capital. So among the advantages of the country on the capital market, we can say that the relatively low valuations, which were already mentioned by Mr. Sardor right now, very attractive PE ratios at the market for the time being. Then the large-scale privatization, which will be done very soon. The third thing probably is that the like Uzbek index can be at some point of future to be included in FTSE or MSCI index. So this can also like be a good how to say move for investors to look at the markets. So probably this is all from my side for them.
Okay,
Thank you very much.
Very interesting point, particularly the need amongst others, of bringing on board the majority of the population and trying to address this massive number of unbanked people. Also, in the perspective of, for example, a privatization program to make it really to create value for the broader population and not just for the financial elite or a foreign elite. Ms. Muller, the IFC is pioneering this Samarkand bond program. You launched the first ever Samarkand bond here in London a couple of years ago. Another few issues have followed since then. So do you want to give us more insight into how you're trying to develop a local, SOMS-denominated bond market abroad, but also in the perspective of developing eventually a domestic bond market? Thank you.
Sure. Thank you very much. So I think as Mr. Nazirov highlighted earlier, local currency is really an essential part in order to be able to develop sustainable economic growth. So we at IFC, we work with private sector exclusively, and for the private sector to be able to develop, having the private sector being able to finance themselves in the local currency is absolutely essential, because you need companies who have revenues in local currency to also be able to finance themselves in local currency. Because too many times you've seen examples from many parts of the world that things go wrong when financing is heavily dollarized. So for IFC's perspective, and it's also the case for our partners at EBRD and the other development organizations, there's really a focus on bringing local currency to Uzbekistan and to do more and more of our financing of the projects in Uzbekistan in local currency, but just as much also help support the development of the markets, both internationally but also domestically, in local currency, because this is the only way to create sustainable growth in the country in our mind. So IFC, we have, over the past 2 years, all of the financing that we have provided in Uzbekistan have been in local currency. And we have found that a very efficient way of sourcing local currency for our projects have been by going to the international markets. So when Jacopo talks about Samarkand bonds, just for everybody's benefit, Samarkand bonds means bonds that are issued in international markets, but they are denominated in Uzbek som. So if the Uzbek som versus dollar exchange rate moves, then that doesn't affect the value of the bond. So all the bonds, the settlement, so it's a simple instrument because the settlements happens in dollars, but they are linked to the Uzbek som. So they are fixed coupon bonds, and if the dollar were to appreciate, that just means that if you have issued an Uzbek som or a Samarkand bond, you just pay investors less. So you don't have any exposure to the currency movements. And what we have found is that there is a number of investors who don't have necessarily the infrastructure to be able to invest in Uzbekistan directly, but they're quite interested in getting exposure to the currency and to the economy that way through the international markets. And that's really the idea behind the Samarkand bond market, is international investors who doesn't necessarily have the ability to come directly to Uzbekistan to invest. They can invest offshore in international markets and get the exposure that way. And we issued, as Jacopo said, we issued the first Samarkand bonds IFC in the spring of 2018. We were over 2018. We saw quite good demand from investors, international investors in these bonds. We were able to do 5 bonds in total over 2018. We raised a total of $60 million that we were able to deploy into projects in Uzbekistan. And the market has really continued to grow. So 2019, the market has doubled in size. We cannot take all the credit for the market. In 2019, we weren't actually that active, but we have seen EBRD and FMO being quite active issuers over 2019. And I think it's quite remarkable to see, if you look at that market, even though the Uzbek som have depreciated very significantly over the year, the interest rates that international investors are demanding on these bonds has actually gone down. That really shows how strong this demand from international investors in the story is. And I think ultimately the next question is, how do you get other issuers? So at the moment, the issuers that have been issued into international markets has been AAA rated international financial organizations such as IFC, EBRD, and FMO. So how do you get lower rated issuers also to be active in this market? Because this is ultimately the way for Uzbek companies to source financing from international investors, but not in dollars, but in local currency, which is what they need. And it is a challenge because the types of investors who buy these bonds at the moment are investors who are primarily looking to get the currency exposure. They're not so much looking at credit risk exposure. But then on the other hand, we see the sovereign, we see Uzbekistan Bank coming very successfully to the market in hard currency. So there's definitely investors out there who is also interested in getting exposure to these lower rated issuers. And it's really just a matter of mirroring the two. And I think what we often see is in terms of how do you develop this market. Often you see that it's a matter of investors and issuers getting to know each other. So it might be difficult for a new issuer from a new company in Uzbekistan to directly access these Samarkand bond markets. But typically what we also see in other countries is you might have to go to the market first with the dollar issuance, but then later on, once investors have become more familiar with the name, then there are investors out there who's also willing to take the currency exposure. And there are organizations like IFC, EBRD, we also have the ability to provide support when these issuers come to the market at a later stage. So we can support the market through both sides of our balance sheets. We can be issuers, but we can also be investors and really help develop the market that way. So it's in terms of how do you develop this market further, it takes time. It's a lot about investors and issuers getting to know each other, building confidence on both sides. But I think the way things are going so far, it's a positive story so far.
Okay, and I guess one additional challenge is, as you mentioned, the high levels of historic levels of dollarization in the economy. So I guess it's not just a matter of doing the right reforms. For example, the central bank reform that has just been approved, but also developing a track record to build confidence, not just to build a yield curve, but also to build confidence in the Uzbek som. Thanks, Ms. Muller. From debt to equity, Mr. Charlier, I was recently reading research by your analysts at Renaissance Capital, and it's interesting because they take a pretty positive view on Uzbek equities on the Tashkent Stock Exchange, but in 3 to 5 years. So do you want to give us more insight into what you're seeing at Renaissance Capital?
Sure. Thank you for the question. So absolutely, Renaissance Capital, we've, in the last 12 months, spent actually quite a bit of time looking at Uzbekistan. Our bankers have been in country. Our head of investment banking spoke at a conference last week. I'm at a conference this week. And the reason for that is actually quite easy to explain. If you look at countries that are prospective frontier market countries, there are very few that have the scale and the growth prospects that Uzbekistan shows. About 35 million people in the country. Quite a bit of those are youth that are being well educated. We saw a literacy rate of 97% coming into the workforce. It's a diversified economy, as we learned, so quite a bit of commodities, but also manufacturing and a burgeoning consumer market. So for all these reasons, it's quite an attractive market. What we're seeing on the political side is, as we heard from different speakers today, the right laws are being put in place with the central bank, with the capital markets, with the privatization agency, all being put there, and we heard a great presentation on the KPIs for the next few years. So that builds quite an interesting fixed income, but also equity story. Capital markets in countries like Uzbekistan usually start on the debt capital market side. So what we see typically is the sovereign issuing a Eurobond to set a benchmark for the rest of the market, and we saw that in Uzbekistan quite successfully last February. Then you start seeing the state-owned companies and the financial services entities, for the reasons that you mentioned, being the first ones in the market. And we saw that actually yesterday, a state-owned bank doing a very successful offering. So we see that actually quite positively over the next 12 to 24 months of more issuers coming into the debt capital markets. On the equity capital market side, a lot of that, again, will depend on the government. The government needs to show the way on the equity capital market side through the implementation of its privatization plan. We see a lot of interest from the market for some of these companies. They're quite successful companies, quite sizable companies, which is not always the case countries at the development stage like Uzbekistan. So there's real possibility for companies coming into the market through privatizations, and then hopefully following that and further grow some privately held companies. And as you said, our macroeconomist issued a paper just last week where she says in the next 3 to 5 years, we see quite a few interesting prospects in the equity capital markets for the reasons I just mentioned.
You got experience in across the CIS space. You have worked in that region for many years. There have been many privatization programs across CIS countries. Not very many of them have been successful. So what would be your suggestion? What are the lessons that Uzbekistan can learn to avoid those mistakes that other countries have made in the past?
Well, the good thing for Uzbekistan, we spoke a bit earlier about the first mover advantage. Well, Uzbekistan has potentially the last mover advantage, in that Uzbekistan can look at the mistakes that other countries have made. The companies that are on the privatization list are actually, as I said, quite sizable, well-run companies. The government needs to take the time to develop these companies, get the financials in place, get proper management in place, get independent directors already in place. Take the time to do the non-deal roadshows so that the market learns the names and appreciates the stories before they come into privatization, and then build a real domestic capital market, which requires not only getting the moms and pops to invest, but there needs to be development of real institutional investors in countries, so the pension funds, the insurance companies, the banks, all being involved and ready to access. Because what's important is when you do an IPO, it's not a one-off sale. You need to have aftermarket trading. You need to have secondary trading. You need to have sufficient free flow and sufficient liquidity so that both domestic and international companies can participate. So I think learning the lessons of companies, not just in the CIS, we're also quite active in Eastern Europe, in the Middle East, and Africa. There's lots of opportunities to see in Asia as well what has worked and what hasn't worked, and really positioning the capital markets and the companies to be privatized, to be successful. And that's why we say 3 to 5 years. Of course, everyone would want to see it move quicker, but we'd rather have the government take its time and do this properly.
Just one more detail. Do you believe that practices like dual listings will be functional to this process?
Dual listings can work, and we've seen that. Certainly, London Stock Exchange, is very much likes to attract companies on its own exchange, in addition to doing the domestic listing. We think that's a good way to attract both international investors, some of whom cannot access the local markets for some of their internal reasons. And the domestic listing, we're always very much favored because that gets the domestic financial community also involved. So I think for Uzbekistan, that would make a lot of sense.
Okay, thanks, Mr. Shalia, very, very clear. Mr. Saya, thanks for waiting until now. I know that you are working with a company in Uzbekistan trying to bring it to speed for a possible privatization. We can't disclose all the details about the company, but do you want to share some insight into that experience? What are the challenges that your clients are facing? How you're trying to support them?
Of course, it may be just to follow up on what we just discussed, those threats and opportunities and lessons learned. I fully agree with that, with your view, and I believe that there is a lot of benefit in starting the process as early as possible, in particular in countries where there haven't been many transactions. People oftentimes think that doing a bond offering or IPO is a matter of a few months. I would say it's probably a little bit longer than that. And to get things right, the early engagement is critical. And of course, we talked previously, Mr. Nazirov, who talked about the legal ecosystem and the infrastructure that is critically important, but more on the practical side. When we get engaged in the very early process, there is a level of readiness and preparation, and that work is critically important. The objective here is to create what I believe you were alluding to is the trust, right? Because at the end of the day, in any capital markets transaction, what you will want to have is that is that relationship and the trust between you and the investors, right? So that's the ultimate objective. How do you get there? Of course, I could talk for hours about many very technical things, which I will not do here, but just a few high-level observations. Maybe starting with the disclosure standards, when we speak with companies in not only in Uzbekistan, also in other countries, we always make clear that the disclosure in the prospectus will be assessed against the competitors, right? So it is, companies will be encouraged to follow international disclosure standards, and that will be also the expectation by investors. Oftentimes people will have different reactions to the scope of disclosure. The recent 2 bonds out of Uzbekistan probably give a sense of what is the market disclosure when it comes to debt offerings of this type. Of course, disclosure in an equity prospectus may be slightly different, but that's where we spent a lot of time. Due diligence, critically important, not only for lawyers, but also for other advisors, for the banks. Eventually, the disclosure document is the end result of the due diligence process, and there is a level of transparency, which we also talked about here at one of the presentations, and that transparency has to be reflected through the process, through the prospectus, effectively. Corporate governance, or maybe more generally, I would say, it's the 21st century, the sign of our years, the ESG, more generally, environment, social, and governance, a very hot topic these days in capital markets in particular. In equity and debt capital markets, there is a lot of focus, and companies from Uzbekistan will be expected to show that commitment to ESG, right? We know the history. It has moved and developed since 2014, since Kofi Annan's statement and the call to the CEOs, and today it is one of the most important topic, not only for managers, but also for regulators. And last but not least, we alluded to this one here, even on this panel, the corporate governance structure. That's critically important, in particular in the context of equity offering, the quality of the management, the people who actually run this business, but also the quality of independent directors, right? The previous presentation talked about the rights of minorities. It's also the rights of investors and the comfort that investors get when they look at the management and how the business is operated. So I will maybe...
So very insightful. Thank you, Mr. Saya. We got time for questions for the panel, but also we can go back to questions for Mr. Nazirov. So if there is any question, please raise your hands. I got one more for the panel while our audience think of good questions from our panelists. We have seen many different efforts in the region and across the world to develop functioning financial centers. And if we stay in the region, we have seen next door, Kazakhstan has tried for many years. We're developing Almaty as a financial center, and now it's trying with the Astana International Financial Center. Further east, Mongolia also tried to develop a financial center, stock market at the height of the commodity boom, and it's seen that at the beginning was doing well, but now it's not that successful anymore. So what could be, from your perspective, the role that Uzbek, that the Tashkent Stock Exchange can play in the strategic vision of any foreign investor?
Well, if I can take the lead on that. So Renaissance Capital, we actually became members of the Astana International Exchange just this past summer. And I think, and we've got experience looking across Africa as well, where you have 54 countries, and many different countries have tried to have their own exchange. There's actually an exchange called BRVM, which is based in Abidjan, which agglomerates, I think, 8 or 10 different stock exchanges of different countries into one. I think that's probably the only successful example of that working. Now, I think what's important is to have the proper expectations. What's important for Uzbekistan is to focus on its domestic market. There's a significant, there's a potential for the financial industry to be developed, as I mentioned before, the pension funds, the insurance companies, getting people to trust their banks so that they deposit the money in the banks rather than keeping it under the mattress. Once that hole develops, what that creates is a whole microcosm of a functioning capital market where money finds projects. The problem many times when you discuss countries at the stage of development of Uzbekistan is that there's a lot of money looking for projects and there's a lot of projects looking for money. And the role of a functioning capital market where you have not only, when I mention capital markets, I mention not only the stock market, but getting the private equity firms, the venture capital firms also to be working, the banks to be lending, microfinance to be working, is that money that is being saved is being properly invested and provided to projects to be developed. So what I would recommend is not to have aspirations of having a regional or an international financial capital market, but having something that works for Uzbekistan.
Domestically. Mr. Ichayev, getting people to trust the banks. How your own bank is trying to get people to trust you?
Well, very interesting question. It refers not only to us, who are a small bank, but also like to many other banks, as it was already stated before. The first thing that we have to admit that, and we have to understand that even the large state-owned banks are entering retail markets. So they are not just announcing the plans, but they are in fact bringing foreign experts, bringing foreign professionals, and employ them in the bank to open the bank for retail clients. So this is, I think, already a very, very good step in front of retail clients so that they get involved into the banking activities. The second thing regarding capital markets, a very good instrument can be preferred shares, yes, which deliver to the owners a kind of fixed type return, but at the same time they involve them into capital markets and they understand what the share is, how it can be bought, how it can be sold, and it brings like not only a good interest income, but also carries a very significant educational role for the retail clients which can come to the market. Mr. Atabek 10 minutes ago announced that only 3,000 active brokerage accounts in the country with 35 million population, which is actually like nothing. So even if the number we bring up to 100,000, it can be already a significant step. And as for me, working in the bank, we see that there are a huge amount of money under mattresses, which people keep mostly probably to make a marriage for their son or to build a house for their children. And this money is not being deployed into the real sector of the economy. So now banks bring the money into the banking system by announcing large interest rates for the deposit. But at the same time, these deposits are mostly one-year deposit, which is very short term. So the capital markets, indeed, they can bring long-term money to the real sector of the economy, and this can be done like finalizing first by educational thing. The second thing is that the people should feel that by investment into shares, they can really get a long-term income, which is very important at this point of time.
Okay, thank you. Mr. Khojnasarov, do you want to give us your perspective on this? Do you agree on the fact that the recipe for success for the Tashkent Stock Exchange lies in its domestic focus?
And in here, actually, I have no option other than saying no, right? And yeah, definitely, because this is in our direct interest, because we are a local broker. We want very large, developed, with sophisticated, efficient infrastructure and financial products, vibrant market. Potential is there. The only thing is that, again, our local stock exchange was established as a platform for privatization back in early 1990s, but at this stage, it's not until now it had not been considered as a platform for raising capital. But you have hundreds of, maybe thousands of joint stock companies, public stock companies, but they are 99% or 100% owned by the state. So what is the point of having a public company whereby the state still owns 100%? So we strongly believe and we strongly recommend that those public majority or fully even large substantial minority state-owned companies, they should be privatized as soon as possible. But I'm more than confident that the SAMA, State Asset Management Agency, so they have the criterias of companies and industries of being strategic importance to the government. So whichever company is not strategic to the government, they should be privatized as soon as possible. So we can talk very long, and then I see Isfandiar is pointing that we should cut. So yeah.
Okay. Well.
So yeah, definitely yes. We should develop the local capital market. Definitely. Yeah.